What's up, chip enthusiasts? Last night, the Dutch giant ASML dropped its latest earnings report. So, how did they do? It's a two goods and one bad report. Revenue slightly missed estimates, but the stock is up. Let's dive into the core numbers. ASML's latest earnings report presents a mixed picture, characterized by two goods and one bad. While revenue slightly missed estimates, the company's stock has soared. Let's look at the core numbers from their Q3 2025 earnings. Net sales, or revenue, came in at 7.5 billion euros, a slight miss compared to analyst expectations. However, earnings per share, or EPS, reached $5.49, marking a small beat. This demonstrates efficient operational performance despite the revenue shortfall. The real shockwave came from net bookings, or orders, which hit a massive 5.4 billion euros. This figure significantly exceeded expectations, signaling robust future demand. The market is ignoring that slight revenue miss because it's laser-focused on future visibility. This strong order book provides a clear outlook for ASML's performance. The stock surge reflects the value of that locked-in future growth, driven by key management promises and strategic insights. The AI gold rush is real. Out of that mind-blowing 5.4 billion euros in net bookings, 3.6 billion euros came from their advanced EUV systems. This demonstrates massive sustained investment in advanced logic and high-end memory, or HBM, critical components for AI infrastructure. Management is crystal clear. This proves massive sustained investment in advanced logic and high-end memory. The demand for AI chips drives ASML's advanced EUV systems. Furthermore, CEO Christophe Fouquet essentially guaranteed long-term growth by stating, "We do not expect 2026 total net sales to be below 2025. In this uncertain economy, that's an absolutely huge commitment that gives investors supreme confidence. This commitment is particularly significant given global economic fluctuations. The stock surge reflects the value of that locked-in future growth. Wells Fargo has even raised its price target on ASML to $1,140, citing strong momentum. Next, let's break down who is about to feast thanks to this massive ASML order book. ASML's exploding EUV orders confirm that AI infrastructure is accelerating. This acceleration creates a massive tailwind for the entire supply chain, from foundries to memory players and AI chip designers. The foundry leaders like TSMC and Samsung are major beneficiaries. EUV bookings are up, and they even recognized revenue from the first high-NA EUV system. This is the strongest signal yet that TSMC and Samsung are accelerating their 2-nanometer and below process node expansions. Their order books are full until 2026. The memory players, particularly those involved with HBM, are also seeing significant gains. Management specifically noted that DRAM customers are adding EUV layers. What does that mean? The demand for HBM is becoming more sophisticated and yield-intensive. This is a huge positive for memory giants like SK Hynix and Micron. Finally, the AI chip designers such as NVIDIA and AMD stand to benefit immensely. If the foundries have equipment assurance for years to come, who benefits? NVIDIA and AMD. This guarantees that their AI chips will have ample, stable production capacity to meet the cloud giants' colossal appetites. Now, we have to look at the downside. ASML management clearly flagged a major risk: geopolitics. This is a critical factor influencing the semiconductor market. Despite strong Q3 sales of DUV systems into China, which made it their largest market by ship-to-location this quarter, a stark warning was issued. Management stated, we expect 2026, total net sales to China will significantly decline compared to 2024 and 2025. This indicates a clear shift in market dynamics. This confirms that trade controls are real and biting. It also teaches us the key investment lesson of the day: the semiconductor market is accelerating its split. Advanced nodes, specifically EUV, are AI-driven, with high visibility and highly optimistic. These represent the leading edge of technological innovation. Mature nodes like DUV are facing geopolitical headwinds and potential overcapacity. This segment of the market presents different challenges and opportunities. Your investment strategy needs to be aligned with the leading edge, where the EUV action is. Focus on companies at the forefront of this technological advancement. To sum it up, ASML's core message is simple. The demand for cutting-edge semiconductors driven by AI is powerful enough to completely overpower macroeconomic softness and geopolitical uncertainty. The stock is up because the market is buying into the long-term value locked in until 2026 and beyond. This long-term outlook provides stability and growth potential. If you want to win this earnings season, focus on companies that are supported by ASML's advanced equipment and converting AI hype into real, tangible revenue. That's all for today's deep dive. If this video helped you understand the semiconductor landscape, hit that like and subscribe button and let us know in the comments. Who do you think is the next big beneficiary of the ASML boom? See you next time. Peace out.